Welcome back to another video, y'all. And in this video, it's our third video, we're going to talk about price action and volume, fuel of the move, how to spot the smart money entries. Now, above anything else that you'll learn from this free course, whether it's my indicators, my entries, all of that stuff, volume and price action is king. This is the one concept. This is the one thing that institutions and smart money cannot hide behind. They are the ones that move the market as they buy and sell at quantities that add momentum to the market. No matter how much money we have, we cannot move the market at like they do. They're putting up millions of dollars per day to move the market up and down. But they cannot hide behind the volume and the quantity of what they're actually putting into the market. Knowing how to read price action and volume is what brings everything about this strategy together as we get through all these videos, and you'll see everything. Now, there's one book that every trader must read if you want to know about volume price analysis, and that is a book. It's called A Complete Guide to Volume Price Analysis by Anna Cullen, where she breaks down how to read and to understand price action and the markets in real time. I read this book 3 times. It's helped me to understand why it's moving the way it is, why to stay out, and why to walk away for the day. It's helped me to not take every single trade that I see based upon just what the market is doing, but instead I learned how to read what the market is saying. So I'm gonna head straight through the charts and show you how price action and volume has worked for me in my strategy. So with this one, I'm gonna go through the same chart from before. 1 second, chart. So it's the same chart. I haven't changed anything about it, right? So one thing that we're going to talk about is price action and volume and why it is so important that we understand how to read what the market is saying. So as we see here, right, this is price action and this is volume. What's one thing we see here on this first 5 minute candle? We see a huge body candle, a red one. This means that sellers are present here. But look at the volume. It matches the big buy that we see. This means that sellers are in control for this 5 minute candle. Now, I don't take a trade on this candle. I wait for the break right here. Now let's keep going. Sellers tried to take us lower, but they couldn't. Bull stepped in here. Why did Bull step in here? As I said in the previous video, we had the yesterday's low because Bull stepped up here. Yesterday's price action is still relevant. This is an area of interest. Yesterday's low. That's why I marked it out in the last video. It's relevant. Let's keep going. So bulls tried to take us up. Now, reason why I can't be bullish is because the trend is bearish. It's been bearish for the past what, few days. As we see here, it's been bearish. So let's read price action again. So bulls tried right here. This amount of volume and this amount on this body and this volume, it matches. But am I bullish because of that? No, because my strategy waits for the breakout. So you can get chopped up in here, trading inside the range. Even though price action did look good, overall trend was bearish. So let's keep going. Once we broke out of the range on the 5 minute candle, what do we see? Big bearish body, high volume. The breakout is confirmed to the downside. That's why for this, you want to go short because we broke below. And we broke below pre-market low, which was right here. And we held. But look, on this 5 minute candle, we had increasing volume. Sellers are in complete control again. They told us exactly who's in control. So it's our job to follow who's in control, not what we think. If buyers swept up and took us above the Asia low and it goes up, it's my job to be bullish. It's my job to react to what they're telling me. So this breakout was confirmed because we had good volume. If the volume here was a lot weaker, then that's an anomaly. That's where price action and volume does not match, and it shows that sellers are not in control. But sellers were in control here. What do we see here? After we broke out, we chopped low volume. This means that there are no buyers or sellers. But I have no reason to be bullish until we show bullish price action and trend change. But let's go to a higher time frame, the 15 minute, right? So with the 15 minute range, right? Let's go here. Same thing. Bulls tried, but they failed. So the 15 minute and the 5 minute are great for this strategy. Big bearish candle on the 15 minute. big body, big volume size candle. It matches. Bears in control. Does it match here? Technically, yes and no. We broke down and we rejected. Boom. But it can't get short here because we already took out all these key levels. So in this instance, we're probably going to just chop until price decides to go low. So what do we do here? This area of support, the pre-market low and yesterday's low, is now resistance because why we kept rejecting it. Boom. If bulls wanted to take us up, they would have, but they did. But bulls were not here. So I had every reason to stay bearish until bulls stepped in. But as you can see, bulls never stepped in. It was all low volume after that. Price action and volume is what makes this strategy work, not my setups. What does price action and volume say? Does it confirm my setup? If it does not confirm my setup, then I can't take the trade because understanding how to read price action and volume, that's what moves the market. And it's my job to follow that. What do we see here? We have a 15-minute bear flag. It's an ugly bear flag, but it's a bear flag. This is a continuation pattern. So let me get another one. Let me do this. Let me just clone it. So we have the big old flagpole and the flag. It points up. This is a bear flag. This is a continuation move down. This is also one of my setups that I'll be talking about later on. But as we can see here, we have no reason to be bullish because we are in a bearish trend. We have lower highs right here. Boom, boom, boom. Then guess what? Bulls tried, but look at this candle. This is weakness. There's no way they're going to push us up. This is weak volume right here. If bulls were going to take us up, they would need to be a stronger bullish candle with some volume. If they couldn't push us up here between 10:15 to this whole hour right here, and they still couldn't do it, bulls are not here. So guess what? Bears still had control. So what did the Bears do? We reject our pre-market low, we swept it, and they took us lower. So we had no reason to be bullish until bulls showed up and they changed the trend, but bulls did not. So that's why reading price action and volume is the most critical thing. I could have this flag set up all I want, but if price action did not confirm this low volume right here, then it's not really a bear flag. Understanding how to read price action and volume is what keeps you ahead of the game in the market. It forces you not to take everything that you see until price action and volume confirms. So I could have went long on this candle because this candle right here is technically a hammer candle, but I wait for my range to confirm it because see, I could have got long right here. I would have got smoked and stopped out because the trend was bearish. That's why I wait for my range break. We had a 5-minute close with good volume. Bears took us lower. Bears that control. And that's how you read price action and volume, right? It has to match up. The candlesticks must match up to the volume. If it does not, that's an anomaly, and you have to stay out that trade. So that's how I read price action and volume at all of my levels to definitely confirm my trade and my entries.